The stock market rewards patience. Most people never learn. This let me ask you something. If Warren Buffett handed you his entire investment strategy, every rule he's used to build billions over decades, do you think most people would follow it? Most wouldn't. Not because it's hard, not because it's secret, but because it requires one thing that almost no one has anymore: patience. The stock market rewards patience. It punishes impatience. And most investors never learn this lesson. Stay with me, because what I'm about to show you could change the way you see investing forever. The harsh truth about investing. Here's the reality. Most investors fail not because they pick bad stocks, but because they can't wait. The market doesn't care about your panic, your fear, or your FOMO. It transfers money from the impatient to the patient. Buffett didn't get rich by selling in a panic. He got rich by waiting. And as Australians, we have the advantage. We know how to be cautious. We value long-term growth. We're wired to survive. But when it comes to the stock market, even cautious people panic. Why people panic, and what Buffett does instead. Let's talk about crashes. The GFC, the COVID crash, global volatility. Every time headlines screamed, the end is near. Markets will never recover. The average investor sold everything out of fear. Warren Buffett, he did the opposite. During these crashes, he asked one question: has the business changed? If the answer was no, he held. Sometimes he even bought more. Why? Because he knows something most Australians forget. Price drops are normal. Fear creates opportunity. Patience creates wealth. Stick around, because in the next section, I'll show you why thinking like an owner will change the way you invest forever. Section 3. Think like an owner, not a trader. Buffett doesn't buy stocks, he buys businesses. Ask yourself, if you owned a successful cafe in Sydney or Melbourne, would you sell it just because business slowed for a few months? Of course not. Yet that's exactly what people do with stocks. Buffett said, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. That one mindset alone separates the rich from the impatient. And later, I'll show you two companies Buffett held for decades. One boring, one tech giant. And why they made him a fortune. Storytelling example 1. Apple. When Buffett bought Apple, people thought he was late. Too expensive, too obvious, too risky. But he didn't buy a phone company. He bought a business with brand loyalty pricing power. A global ecosystem he held. Through every correction, through every headline, through every market fear. Today, Apple is one of Berkshire Hathaway's largest holdings. Not because he was fast, because he didn't sell. Next, I'll tell you why boring companies like Coca-Cola can quietly beat hype-driven stocks. Storytelling. Example 2. Coca-Cola. Coca-Cola is boring, no hype, no tech buzz, no viral headlines, and that's why Buffett loved it. He bought Coca-Cola decades ago and barely touched it since. Dividends kept growing. The company stayed profitable. The investment compounded quietly, decade after decade. Lesson. Excitement feels good, but boredom makes millionaires. Time in the market. Timing the market. Most investors obsess over timing. When's the right moment to buy? When should I sell? Buffett ignores timing completely. His secret: time in the market. The biggest gains often happen right after the worst days. If you panic and sell, you miss the recovery. Time is more powerful than predictions. Time beats luck. Time rewards patience. And in just a moment, I'll show you why your temperament matters more than your IQ in investing. Temperament beats intelligence. Buffett once said, the most important quality for an investor is temperament, not intellect. You don't need to be a genius. You need emotional control discipline, the ability to sit still. Doing nothing feels wrong, but in investing, doing nothing at the right time is power. Fear is where wealth is made. Buffett's famous rule: be fearful when others are greedy, and greedy when others are fearful. Every big opportunity feels scary at first. Most people wait for certainty. Buffett waits for value. Think back to 2008 or 2020. The best investors bought when others sold. Fear is the gateway to opportunity. Patience lets you walk through it. applying this as an Australian investor. Whether you invest in ASX shares ETFs, global blue-chip companies, or through superannuation, the principle is the same. Pick quality, hold through volatility. Let compounding work quietly. Ignore short-term noise. Australia rewards disciplined investors. It punishes emotional ones. Warren Buffett didn't win because he was faster. He won because he waited. He trusted businesses. He trusted compounding. He trusted patience. If you can do the same, the market will reward you too. Call to action. If you believe investing should be calm, disciplined, and long-term, subscribe for Warren Buffett-inspired lessons for Australian investors. Because real wealth isn't built in a rush. It's built by those who can